Hello and welcome to another update video about IMX. First of all, I need to highlight that on this chart you need to disregard these phantom wicks here. They were just generated due to slippage or a glitch on the exchange. They cannot be found on other exchanges. I am already using the Binance chart, so I'm not entirely sure why they occur, but on many other charts you cannot find them, so I disregarded them for the analysis. That's unfortunately one of the problems that we often see in crypto, that there can be this sort of, sometimes these low volume, unreliable slippage wicks, especially when we talk about smaller cryptos where there is not so much volume, these can occur. However, certainly an interesting setup. It is one of the setups that worked out recently here that I mainly present to channel members. Some of the coins I mainly analyze for gold members. Oops. Here under our signals channel on Discord and Telegram. This was one where we said, okay, we had a potential 5-wave move up into the July highs, the early July highs around 80 cents. We said, okay, price is probably going to go back into our yellow support area, which it did. It then turned around quite quickly. Again, bear in mind, this is sort of not really something we need to pay attention to this week, but it turned around anyway, outside of our yellow support area. And the idea was, as long as we're holding the 59-cent level, there can be a focus on higher into for a third wave rally that could take us to $1 and beyond. So far, however, yes, there has been a spike and there has been a rally here on Friday, the 28th of July, Thursday, Friday. But this rally was not a sustainable rally. So I already communicated, I think in the last video already, if not then on Discord and Telegram, that I see this mainly as a B wave top. So that we had only an A wave down, a B wave up, and the C wave down is currently unfolding. And if it is unfolding, it could get close to 59 cents. Why is that the case? Well, it is the case because the rally of the lows, of the July lows, was just a 3-wave rally. Typically very characteristic of a B wave. It is a high B wave, yes. Typically, we don't really want a B wave to get above the 1.38 Fibonacci retracement. That was here at 85 cents. It did break all the way to 91. However, it was not a sustained break. So I think it is acceptable, especially in crypto. I've seen very high B waves. They don't necessarily adhere to the 1.38 Fib retracement guideline, but it's only a guideline, it's not a rule. Important to understand is now that the rally was only in 3 waves, and we are probably coming down in a deeper C wave. Again, I would prefer this to go a little lower. Ideally below the A wave low, so ideally below 67 cents. Also because I haven't got any reliable impulse to the upside yet. We can use the Fibonacci extension tool to give us an idea where this should land. And what you often see is the 1.618 extension at 70 cents, but it wouldn't really be far enough for me because I would like to see it below the A wave low. Again, it doesn't need to. Sometimes when you get these overlapping or overshooting B waves, you get a so-called running flat pattern in which the C wave ends above the above the A wave. But looking at it structurally, it would be likely to go down lower. Also because since it came down here after basically that failed rally, it hasn't really continued to move up impulsively. It's rather been consolidating in a corrective fashion. That all would make another drop for me fairly likely. I did already provide an orange support area that's more like a level to watch and see. Price is respecting that very nicely. The idea was that, okay, look, we already came into our support area initially. This could certainly go higher, but then it would only do that as a diagonal structure. Basically, this would be a rally based on 3-wave structures. So this could be a wave 1. This could be a wave 2, but I don't want it to break below 74 cents. If it's doing that, it is fairly clear that we are in the C wave. Again, I already assume we are in the C wave. I'm purely watching a more bullish scenario in parallel, but it's not something I'm primarily looking for. This could happen, but it is an unlikely setup. You can of course trade that if you want to, but for me, a less reliable one. Overall, for me personally, it doesn't make so much of a difference because this larger setup already worked out. So either we get back into the yellow box and we have a really good reward to risk ratio again, and the setup works again, or if it goes early, not a problem because we already had a chance here. This is something I'm watching, but I don't consider that a really good reward to risk ratio to enter from here. But overall, yeah, I'm still watching for further upside as long as the 59 cent level is holding. That is for me the key bullish support. Below that, I would turn more bearish on IMX. Yeah, that's my update about IMX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.